right, we are back. So let me adjust the camera. All right, good evening, everybody, and welcome back to Walks in Wall Street. Today is Sunday, August 27th, 2023. It's just about 8:59 p.m. Just call it 9 o'clock on this gorgeous night in New York City. Now, you're currently overlooking a beautiful view of New York City's Hudson Yards. We are starting off the live stream on 42nd Street, all the way on the Hudson River Park to be exact. It is a lively night out here in Manhattan. Now, I do apologize. How long has it been? Must be like, 5 days or so since we've done the live stream. I got the big C. I'm fully recovered now. Well, I'd say I'm about 99% better. My voice is a little bit, I'd say my voice is maybe about 90% there, but I feel great, I feel fine. You know, one of the things about, COVID, for those of you who have had it or haven't had it, the craziest thing, in my opinion, with this virus, I got the worst, and I'm talking about so bad, the brain fog. It was almost as if like you couldn't even keep a thought in your mind, and you forgot literally everything. I was making mistakes at work. It was really horrible. Now, the brain fog is probably about 85 to 95% better, but still you get that forgetfulness, which is really crazy, which I've never experienced that before in my life. But yeah, I mean, I guess, water under the bridge at this point, but we're all feeling good. Last week was a very big week. Unfortunately, we did miss it here on the live stream, so I think it'd be appropriate just to do a little bit of a recap of what went on. I would say the major things that went on last week as it relates to the financial markets. Now, if we rewind all the way back to Friday, I'm sure many of you have already watched Federal Reserve Chairman Jerome Powell's speech at Jackson Hole, right? So all of the Fed presidents, all the bigwigs, all the dog and pony show went down in Jackson Hole, Wyoming, and on Friday, to cap off the event, Federal Reserve Chairman Jerome Powell gave his speech. Now, it's sort of like what we talked about on Monday, right? Nothing new, at least from my perspective. Now, I do have to give Fed Chair Jerome Powell credit, because in my view, he has been very direct and to the point as it relates to him telegraphing monetary policy. He has stated time and time again that the Federal Reserve is committed to bringing inflation back down to that 2% target, which essentially insinuates that there could possibly be more interest rate hikes to come. Now, inflation has come all the way down from almost double digits, right? It was just under 10%, right about at 9.1% about a year ago, and we're all the way back down right around 3%. It's still not good enough. So I think that we may have more interest rate hikes coming down the pike. Now, a couple things to sort of paraphrase the Fed chair. He said, look, we still have a risk of inflation in this country. Inflation has not come back down to the 2% target. We've established this 2% target back in 2012. We may be able to revisit that inflation target as it relates to what is acceptable inflation in the United States. We may be able to revisit that in 2025. Now, here's my concern. If we stay in this environment of the new normal of 3.5% inflation, and that becomes the new normal, and then in 2025, which is really only in like a year and a half from now, the central bank just says, you know what, we are just going to change our target for what we deem is acceptable inflation. We're just going to put it at 3%. Okay, that doesn't mean anything is any better. That just means we've accepted this new dystopian reality of inflation, which is unfortunate. Now, we're going to talk about the housing market because we're getting some big housing data coming up this week. Okay, so on Tuesday, I want everybody to mark this in your calendar. Tuesday, S&P CoreLogic Case-Shiller Home Price Index will be released. Now, expectations are for about a 1.1% increase in June from May, and I think that's actually probably going to shoot a little bit low. If you saw my Twitter, which is now called X, if you follow Walks Wall Street on Twitter, I posted like a little bit of a paragraph about my thoughts on the housing market and one of the major issues that I'm seeing with it specifically. Now, the problem is we have 7.5% interest rates on a 30-year fixed rate mortgage, okay? And prices haven't really come down all that much. Let me see the exact comparison that I wrote here. But if you think about a starter home in the United States, right, a basic starter home, in 2021, a 3-bedroom, 2-bathroom home for $450,000 at a 3% interest rate, your monthly payment would be $1,879. Okay, keep that in mind. The same home today, okay, $450,000, 3 bedrooms, 2 bathrooms at 7.5%, right? Because the average 30-year fixed rate mortgage right now is right around 7.25%. So many people are actually getting quoted 7.5% to 8%. That would mean your monthly payment is around $3,146. That is a massive difference for the same property. Now, if we, we'll do a deeper dive into the real estate market later, but we've been talking about this ad nauseum. There's usually an inverse correlation as it relates to interest rates and valuations. Okay, so as interest rates go up, valuations go down, and vice versa. Again, the major problem we have right now is so far, right? It's been about 2 years. So far, prices hasn't really come down all that much. In some specific markets, yes, prices are coming down and prices are softening. However, in some markets, we are just a stone's throw away from all-time record highs. So the same $450,000 starter home that people were buying at 3% interest rates, people are buying now. The only problem is if you're going to have debt acquisition and you're going to borrow money, your monthly payment is going to be a lot more. So the next sort of key to this whole thing is that you're going to see, in my opinion, the markets that have been severely underbuilding, such as New York City. I think those markets are actually going to continue to trade very well in terms of valuations. Now, why is that? Well, for $2-3 million apartments, we're actually seeing tons of cash buyers, right? So 60% of all transactions last month in New York City, guess what? We're all cash, okay? So they're rate insensitive, some of these buyers here in New York. So you have a dichotomy where we haven't been building any new affordable housing in New York City, and all of the little available inventory on the market is being bought with all cash. Now, if you look at some of the, I would say, markets in the United States where we've been building a lot in terms of new housing, it's Utah, Idaho, Colorado, and the Sun Belt, particularly Texas and Florida. So in my view, if I had to make a prediction, I think those are the markets to be looking at for prices to come down more so than other markets, right? It's basic supply and demand here, guys. In order for prices to come down, we need to get supply from somewhere, and it doesn't look like people are selling their homes. So we're not gonna get it from resales because the vast majority of people have low rates. So we'll talk about that a little bit later. This is gonna be a big week for corporate earnings in the United States. Big week. Tuesday, we have Okta, ticker symbol OKTA. We have Box, which is an enterprise software company. The CEO is Aaron Levy. They trade under the ticker symbol BOX. And then we also have NIO. NIO is a Chinese car manufacturer. They are going to be reporting on Tuesday, and then we're going to wrap up our Tuesday with Hewlett Packard. Now, Wednesday, if we do a quick recap, one of my favorite companies of all time, my favorite company, not to say go buy the stock, not to say it's a great investment. It's just because I have a lot of respect for Mark Benioff. I think Mark Benioff is one of the greatest technology CEOs of all time. If you haven't read his book, you gotta read the book. It's called Trailblazer by Mark Benioff. And on Wednesday, Salesforce, ticker symbol CRM, is going to be reporting corporate earnings. All right, guys, that was a little bit of a long introduction. I'm gonna go ahead and close up the laptop here. We'll say hello to everybody in the chat, and we will get started. Again, I apologize. I got the big C. I'm over it. I'm healthy, but sorry we didn't have a stream for about a week. So bear with me one moment and we'll get started. All right, we are back in New York City, my friends. Let me go ahead and scroll to the top and say hello to all of our chatters here. I see Richard Vogel, Brian, what's up? The one and only FredX. Hey, Schuler's here. Josh Parker, Michael, what's up? Stephen Cruz, welcome. Western Mass Dave. British Gray, David Main is here. What's up, Lance? Thanks so much. Robert, Teresa Diaz, Jimmy Hook, James Tiger. Wish I brought some water with me. Hey, Sparks Carnival, thanks so much for joining, my friend. Appreciate it. Hey, Ukrainian Royals, happy Sunday and God bless. I see you're by the Circle Line. Yeah, thank you so much for your very kind donation. I'm happy to be back. It was a crazy experience. I think it's important. I'll quickly tell you my experience with the big C. So it's not like I was feeling all that sick, if that makes sense. The biggest issue for me, and we're gonna head all the way down to 42nd Street and then bang a left. The biggest issue for me, and I want to hear from you all in the comments to see if we have some similarities here. The brain fog was unreal. It was just like, it was absolutely unreal. I couldn't even keep a thought in my head for more than 2 seconds, and then my mind would like go totally blank. And it was like that for probably 2.5 days. And I'm about 85 to 90% better on the brain fog point, or the front. But it's the strangest thing. Like, I was making mistakes at work, like typing email, it was just so horrible. I couldn't remember anything. It was bad. So I don't know, anybody have a similar experience? That was the worst by far. Everything else, I just felt a little bit achy. I lost my voice, but now it's back. But I'm good now. We're good to go. Justin S says, when I had it, it was more like a common cold, no brain fog from it. You're lucky. It was crazy. I was wondering if it was ever going to go away. I'm like, how can I not remember anything? It was super strange. Anyway, hopefully that's all water under the bridge now. We are looking at the beautiful Hudson Yards development here. Hey, Roberts says, Tom, my symptoms were the same and I also had no energy. My energy was okay. I never really lost a lot of energy. It was just the brain fog and a little tired, but I wouldn't say it was super bad. Yeah, Mr. G says, I as well. Deep concern if it was a permanent effect. Now, I went down the Reddit rabbit hole. I started to Google it. I was like, brain fog from the big C. And apparently, this is very common. It is a very, very common, not side effect, symptom, if you will, of the virus, is brain fog, right? You're forgetful, but thankfully for me, it seems like it's all over. But for some people, even after they have recovered, they claim, or they say, right, that they still suffer from like this very deep brain fog, forgetfulness, which is totally horrible and strange. So hopefully that doesn't happen on my end. Lots of traffic out here tonight. Hey, Ukrainian Royal, thank you so much again. This is Hudson Yards, looks great. You're in one of my favorite spots in New York City. My experience was just a bad flu. Oh, but you lost taste. Wow, for about a week. I didn't have that. Yeah, it's kind of strange that it plays with your senses. It's so weird. Yeah, thank God I didn't lose any taste. And thank God you recovered. Hey, Western Mass Dave, what's up? This is Tom, you're very healthy. Yeah, that's true. So I didn't have like any crazy symptoms. You're right. Mr. G says, sir, what meds did you take, if any, to help you over the struggle? No, it's a good question. It's a good question. So I didn't take any medications per se. I wish I brought some water. I just hammered the vitamin C. I was taking about 2,000 mgs of vitamin C a day. I think 5,000 IUs of vitamin D3. And there was another one. There was one more, I forget what the name. Maybe it's the brain fog. Just kidding. No, I just forget the name of it. It's quercetin. Quercetin, that's what I was taking. So those three. And then I was good. Hey, Carolyn, this is good to see you back. Thank you so much. No, Richard Vogel says Edelberry. I read that online. I didn't take that though. It was so expensive at CVS. Yeah, Sparks Carnival, you're right. Hey, War Walker, what's up? This is Zinc. Yeah, I didn't take any of that either, but it's definitely probably a good idea. Hey, Custom Built American Fire Trucks. Thanks so much for your very kind donation. Appreciate it very much. Yeah, and it's not like, and I wasn't even really congested at all. It's just, it was weird. Like everything was like super dry. My throat was dry. It was just a strange, I've never really been sick like that before. It was just like a totally different thing. It was weird. It was like I was delirious. That's a good way to describe it. Like, you ever been so tired that you can't keep a thought and you just like are totally incapacitated at work? It's like that, but for days. All right, so we're walking down 42nd Street. I think we'll go to Bryant Park today. And I think we'll keep it at an hour just to sort of work our way back into things. Hey, Ukrainian Royals is, I don't know what it was. I just took a test. But you're right, maybe it is that particular strain. I don't know. Mr. Nash, yes, I did. Sparks Carnival, you're right. The upcoming Labor Day weekend. Now, here's the crazy thing. As you all know, this Friday, guess what this Friday is? It's September. Yeah. September is already here. And September, unfortunately, is the worst historically. is the worst month for US equities historically. So maybe history will repeat itself. Maybe history will repeat itself and this will be a very bloody September. Who knows? We'll see. And that too, Natasha pieces the unemployment. Well, the jobs numbers are out on Friday. So the jobs report, it's going to come out on the 1st of September, or Friday, right? Estimated to be about 172,500 jobs were created in August, from about 187,000 in July. Now, I don't know. We've had some pretty massive and major beats regarding the jobs report. But let me just make a move here. But usually, as we head into the fall, I don't know if we're gonna get these big beats again. Usually going into the summer, there's usually a wave of hiring for the summer demand, right? Particularly in hospitality. If you've been looking at a lot of these jobs reports we've been getting, there's been massive numbers in hospitality, right? Which makes sense, right? Really anything that involves hospitality. And a lot of those particular stocks have actually been doing well too over this past year. Like the hotel, the lodging stocks, Hyatt, Hilton, you get the picture. So I don't know, our business is sort of hunkering down now for the fall and the winter. It's possible. Now I will say this, as it relates to the market, right? As it relates to the stock market, the equity market, after Labor Day, it's really considered to be the last hoorah of summer, right? So Labor Day weekend, everybody has the big parties in the Hamptons, out in Montauk, in Connecticut, in Martha's Vineyard. You get the point. But after that, it's back to the office. It's sort of back to reality. And one of the things you usually see with that is a major pickup in volume on all the exchanges. So you have the summer doldrums, which we have kind of gone through already, right? So very low volume on the exchanges. Nobody's really in the office. All the big guns on Wall Street are out in their summer homes. But after the one and only Labor Day weekend, well, things start to pick up again. Hey, Brendan O'Brien says, Tom, stimulus money going through Python in terms of the consumer. All right. Hey, Sparks Carnival says major economic data in coming days will provide some guidance on how strong the U.S. economy is and whether the Fed will raise rates further in September. Well, I mean, Fed Chair Jerome Powell hinted at that, didn't he? He sort of hinted at it briefly on Friday, that we could potentially be expecting more rate hikes. Now I have a quick question. Is everybody still getting advertisements midstream? I've been trying to turn that off, but I guess YouTube came out with the new, advertising thing where it runs advertising in the middle of the stream, which is a little bit annoying. That's so weird. I wonder how I turn it off. Strange. Well, anyway, hopefully it's not too annoying. I gotta just dedicate time to figure out how to turn that off. Yeah, Mr. G says, do you mean the commercials? Yeah, for sure. Hey, Ukrainian Royal, thank you so much. You're very kind. So I have to head out now. I hope to see you again soon, and have a good Labor Day weekend. I live in northern New York near Canada's border. I'm going hunting. No ads on my end. Hey, very cool. Well, thank you so much for your support. I wish you a great, prosperous, and fantastic Labor Day weekend. Warwalker says yes. You know, I don't know what's going on. I gotta figure it out. Oh, is that true? Yeah, I don't know. Figure it out. I don't have a problem with them running the advertisements before the stream, but during the stream just seems a little bit crazy. It seems a little bit weird. Hey, Dan Zhang says, oh my God, Tom, Evergrande is so screwed. It just fell 87% as it, Hong Kong resumes trading. Yeah, that is a little bit of a mess, right? Now, Dan, if we think back, I don't know, maybe about 8 months now, do you guys remember us talking about the Chinese commercial paper market? Probably about 8 months ago. Now, if you go to Crane Shares website, or just type in Crane Shares Chinese commercial paper, you could actually see an ETF of the Chinese commercial paper market. Now, what was concerning to me and many of you, right, because a lot of you guys have been pointing this out, is specifically about 8 months ago, you had share prices trading below 2020, which was the COVID crash. So if only 8 months ago, you had share prices or prices of Chinese commercial paper trading below the worst pandemic on history, right? What do you think that means about the market? If it wasn't liquid then, right? If it was an illiquid, crazy market then, what do we think it is now? So is Evergrande big enough? This is the question. Is Evergrande now big enough to have a contagion effect or a spillover effect and potentially impact the US equity market? I don't know. I'm not so sure. I don't know, any thoughts there? Does anybody think that this Evergrande situation is so big, is so grand, no pun intended, that it could potentially have some contagion and spill over into the United States? We're coming up on the disgusting Port Authority bus terminal. Hey, DC, what's up? Good to see you. Hey, John Abraham, what's up? Brendan O'Brien says no. Natasha P says I don't think so. Marco says Evergrande stock has fallen 87% after reopening on the Hong Kong exchange. Yeah, China just opened, right? Hey, Jay Frost is here, what's up? Yeah, so I mean, I don't know. I don't think so, because the only way that it could have significant contagion in the US is if a lot of US banks own a lot of Chinese commercial paper. And I don't think they do. So, is it going to be crazy systemic? No. But could it have spillover effects in other ways? Yes, I think yes, possibly. Because if you actually do the research and you read into like how bad this Evergrande thing is, you know, there are Chinese consumers, you know, middle class, hardworking Chinese people that have put deposits down for apartments And these properties are not even going to get finished being built. So they have to figure out if they're going to give how they're going to give those people their money back, if they're going to be able to get the money back. And if they can't, well, I mean, that's just going to be cataclysmic. So if you have millions and millions of Chinese hardworking middle-class people losing out on their largest asset that they have, because either they're not going to get their deposits back or their property is not going to be completed. That was a little bit of clang and bang there with those two delivery guys. That could be a problem, right? Because China is one of the biggest growth engines of the global economy. So maybe a little bit of an inadvertent way. Is it just me, or is everything that's going on here complete chaos? I've noticed over the last couple months, there's so many like food delivery bike and Vespas. Like there used to be a lot before, but now it is like, it's almost crazy how many there are. It's wild. We'll try to maybe get out of here and make a right. We'll head down by this Tesla. Hey Abdullah, what's up? Michael Joseph is here. Good to see you. Thanks for joining us on this beautiful Sunday night in New York. Joan K, thanks for joining. Hey Dallas, what's up? Wow, Will, is that true? Said you saw something on X that the Chinese government is handing out gold bars. I don't know if that's true. I don't know about that. Hey, Smee Media is here. What's up? We are now standing right outside of the New York Times building. Now there's a major enterprise software company called Datadog that's right here. Oh wow, everything in Miami, very cool. So we'll technically be co-workers tomorrow. I'm game for that. I'm down for that. Congratulations on that. Love it. All right, let's head all the way to Bryant Park. It's a little bit windy. I don't have the microphone, so I apologize. We'll just do the best we can with what we got tonight. It's the first night back after the Big C. I think we're doing all right. Yeah, Joe Drivers, is Tom and team. Glad you're back. Yeah, I'm glad I'm back too. It was very, very tedious having the Big C. Hey, Thomas Vegas says hello, Tom. Good to see you, Thomas. Now, Sparks Carnival. Speaking of Datadog, speaking of cybersecurity. Any predictions for next week? We have some pretty decent tech earnings. I wouldn't say massive, but we always talk about this particular cybersecurity called IAM. Now, IAM is an acronym for Identity and Access Management. Now, the biggest player in that space by far is Okta. And Okta reports earnings on Tuesday. Ticker symbol OKTA. Now, their biggest competitor is a company called Ping Identity, P-I-N-G. It actually used to be a publicly traded company until it was taken private by our good friend Orlando Bravo. And Orlando Bravo owns the private equity giant, massive success, called Thoma Bravo. So Thoma Bravo took private Ping Identity, but it is a major competitor with Okta. Okta's not doing too well this year. I think its share price is down about maybe 70% from its record high. But I don't think these small niche cybersecurity companies can compete with the big dogs, particularly Microsoft. Palo Alto Networks. Because if you think about a company like Microsoft, they're so big, they could just acquire companies and continue to acquire companies in perpetuity pretty much, and plug them in to their Microsoft 365 or MS 365 suite, if you will. So real quick, this is exactly what I was talking about. What you're starting to see now here in New York are all of these Vespas. They're just lined up and none of them have license plates. It's crazy. I've never seen anything like it. Now, I know this doesn't seem like a lot, but as we continue our walk, you'll start to see some more. I don't know where these all came from. Anyway. All right, so this is now 7th Avenue. This is looking uptown into Times Square. But we're gonna continue to go right to Bryant Park. Hey, Sparks Carnival, this is Tom. I completely agree. Microsoft, Alphabet, Google. Yeah, it's definitely tough to compete, right? They're squeezing these smaller companies like Okta. I think Okta is just too niche specific, right? You can get an IAM or an identity and access management solution through Microsoft. There's no need to buy, you know, a specific piece of software from another vendor when you can just get everything all in one in-house. It's a good point. Okay, this is now Broadway and West 41st Street. Let's just get over the intersection here. Hey, Ibrahim Azam, it's good to see you. Thanks for joining us. Gary Carpenter, CMO Solutions, what's up? Hope you're well. Vincent, welcome. All right, let me try to catch up on some of the comments. Hey, Carl Roth says, good evening, Tom. How's your week going? What's new in the markets in the US? Well, it should be a pretty busy week. We have more corporate earnings coming up. We have some housing data. But I think most importantly, actually, it's actually a really nice view of the Chrysler building all the way in the distance through Bryant Park. Friday is September 1st, which is crazy. And as we know, on the first business day of every single month, the Institute for Supply Management will be releasing their PMI numbers. So the PMI numbers for the US are fantastic leading economic indicators. So as we always review, you have leading economic indicators, you have lagging, and then you have coincident. So on Friday, that is the first business day of September, believe it or not. So we are going to get the US PMI manufacturing numbers, which should be interesting. We've officially made it to Bryant Park. And looking all the way downtown, you could just see One World Trade Center. I know, Sparks Carnival says summer is over. It kind of sucks. I'm not looking forward to the fall, to be honest. But some people like the fall. In New York, the fall's not too bad. Central Park looks gorgeous in the fall. But, I don't know, I'd rather have it 90 degrees. We'll see. Hopefully it's not a bad winter this year. It's the only thing I'm hoping. All right, we've officially made it to Bryant Park. You see one Vanderbilt all the way in the distance with that beautiful blue top. But as we talked about on Wednesday, this guy is going to be reporting earnings. This is Salesforce Tower, ticker symbol CRM. The CEO and founder is Mark Benioff, and their major tower is right here on West 42nd Street and Avenue of the Americas, right next to Brian Moynihan's tower, which is Bank of America Tower. Now, I believe this Monday, which is tomorrow, is going to be the last night, officially, where they're going to have the summer stage, so the free movies at Bryant Park. I think this is the last Monday they're doing that. Michael Joseph, what's up? It's good to see you. Thanks for coming. Michelle K says, Tom, how are you? I'm about 99% good. I think my voice is still a little bit shot. But I think in a few days it should be back to 100%. But thank you for asking. Hopefully you had a great weekend. And this is an awesome view of the Steven Schwartzman building right here. Hey, Marco says, I predict Bears winning on tech. It's definitely possible. September is the worst month historically for equities. So we'll see if some of this Evergrande situation or news, implosion is probably a better descriptive term, bleeds over into the United States. Now in Bryant Park, you have one of the best views of the Empire State Building. Look at that. It's an unbelievable view. And you could also see the moon right here. Stunning. Hey, Mothman, good to see you. A lot of people out still for a Sunday. It's late too. I think it's almost 10 o'clock. Beautiful. Continue to walk over to Grand Central Station. Hey, Haas Manning, what's up, man? Good to see you. Hope you had a good weekend. Ooh, I did. Sparks Carnivals. Tom, did you get a chance to watch Messi play against New York Red Bulls? Front row tickets were $3,600. Dude, I watched some of the highlights. Insane game. I think they beat the New York Red Bulls, what, 2-0? Now, I got my buddy tickets to see the next game in Miami. So I think now that they played in New York, next weekend or soon, in a couple days, I think New York goes to Miami and plays in Fort Lauderdale. I actually got my buddy tickets, 2 tickets to the game. They were pretty penny, let's just say that. But yeah, I mean, I really, really want to see in person Messi play live. I think that'd be amazing. Hey, UniJ23, thank you for joining us. The summer doesn't officially end until September 22nd. That's true. Hey, Joel PM. Says equities derive value from the US 10-year, which is now at its highest level since 2007. Joel PM, you're correct. I'm not sure if you saw what I posted on Twitter this weekend, or X, as the website is now called. But Joel PM is 100% correct. Now, why is that? Well, I'm sure if you manage a portfolio yourself, or you work on Wall Street, or you're an analyst or something like that, you've probably built discounted cash flow models, right, in Microsoft Excel. And essentially what investing is you're trying to figure out the present value of a company's future cash flows, if that makes sense. So as you take the 10-year yield, right, the risk-free rate, the benchmark, I should say, and as the 10-year continues to climb, well, generally speaking, the present value of companies' future cash flows start to diminish. And vice versa, right? So if you think about 2021, when interest rates were pretty much near zero, a lot of these very high beta tech stocks, these high beta growth stocks, were going to the moon. They were going to Mars. And that's because valuations were bid up like crazy and multiples were expanding, right? These stocks go through multiple expansion. But now that interest rates are continuing to go up, maybe this could be additionally bad news for equities. September is historically the worst month for it. But yeah, as the 10-year yield goes up, generally the market has to adjust for that. And you also have competition from money markets and just regular bonds, right? If you look at the 10-year, if you look at the 1-year treasury, right, if you just take a look at the yield curve, a 1-year treasury is almost 5.5%. That is significant. That is really, really significant. I mean, think about that. If you have $1 million and you're sick of the volatility, you're sick of the ups and downs, you went through all the crazy volatility during COVID, and you just want to park your money and you just want to chill. Well, that's a significant amount of money, right? If you could just park $1 million at 5.5% and just collect that every single year, risk-free, no risk. right? In the investment business, there's something called risk-adjusted returns. So yeah, you can make a crazy return, right? Like 1,000% because you bought some, you know, teeny tiny cryptocurrency scheme. But was that, can you create duplicity with that, right? Can you replicate that process? Can you do it again, right? That is not a replicatable investment strategy. And those returns are not appropriate risk adjusted, right? That's an extreme amount of risk. So I think Joel PM makes a good point. Mikey G says Tom X, aka Twitter, won't be around 2 years from now. Ad revenue is down and keeps dropping. Let me take a screenshot of that. I disagree with you respectfully. I think it's an interesting comment. We'll see. We'll see. I don't think so. I think Twitter and X is going to do fantastic. Beautiful view of the Chrysler building here. Hey, NNB 045s, happy Sunday night. Thank you so much. I did get your email, by the way. I just haven't yet responded. But I think that's a great idea. So, speaking to NNB 045, I think it's a great idea. I'm going to use you as my first go-to resource of anything French. Obviously, a lot of Canadians or Canadian friends are fluent in French. So I think that's a great resource to be able to use. Hey, NYC Cherry Group, what's up, man? It's good to see you. Thanks for joining us. I don't know if you heard, I'm just getting over the big C. The big C. And I was telling the chat, I was telling the team here, it was just so strange, right? It wasn't the traditional sickness. It was, for me, the big thing was the brain fog and just feeling disoriented. It felt like I had about 20% of my brain capacity. And it was just the weirdest feeling, and I'm probably about 80 to 90% better in terms of the brain fog, but 99% better in terms of everything else. It's strange. I never had brain fog like that, and I'll shut up about it. I know I'm sort of rambling on about it, but it was just so weird because it's kind of indescribable. It's like, you know, my boss is talking to me on the phone, she's trying to tell me something, and I just can't register what she's saying, if that makes sense. And I was like, why can't I just like compute like basic things that people are telling me? It was so strange, super strange. Anyway, yeah, and then your mind would just go blank, like your mind would go dark. You're trying to find the words to describe something, you just can't do it. It's weird. It was weird, man. Oh, Cherry Grove, you have it now too? Oh, God, dude. I think something's going around. I think the big C is going around and some other, you know, just regular colds going around the city. So, hopefully you'll get better soon, my friend. We are now on the corner of Park Avenue and East 42nd Street. This is the beautiful, the one and only Grand Central Terminal, one of my favorite places in the entire city, right here at Pershing Square Plaza. Every time we think about Pershing Square, we think about our good friend Bill Ackman, who runs Pershing Square Capital. Let's actually check out the restaurant. I think they're just closing up. Justin S. Schools are back in session. Now, when I was a kid, they started schools right after Labor Day weekend. Now, when I was in Miami last, look at how cool this restaurant is here. What do you guys think about the inside? All right, thumbs up or thumbs down on the interior here. You're correct. Whoever said this place is a little bit overpriced is correct. I've eaten here once. It's just like regular diner food and it's very expensive. But the interior is actually pretty cool and it has good views of the MetLife building and Grand Central. I know, Haas Mannings is right. I can't believe schools start in August, which is crazy. You know, I was down in Miami and the schools were already started already. It was like so strange to me. I was on my Haas Manning, I was on my Vespa just in the morning. I think I was gonna get a coffee or something, and I'm stuck behind all these school buses. I'm like, what the heck are all these school buses doing? And apparently in Florida, schools start way earlier than they do in New York, which I never knew, which is a little bit of a bummer. When I was a kid, the big, you know, last party, you know, hoorah of summer was always Labor Day weekend, which was great. This is One Vanderbilt. You know, in a few days, I'm actually going to be going to the, what's it called? The Centurion Lounge. The Amex Centurion Lounge. One of my good buddies invited me there, and I'm going to check it out because the views, from what I hear, are unbelievable from the inside. All right, let's go inside Grand Central Station. We'll check out some of the architecture in here, which is pretty unmatched. But if you are all enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these starting at 8:30 p.m. So if you like what you see and you enjoy these streams, feel free to click the subscribe button. Yeah, Jafet Perez says Jerome Powell at the Jackson Hole speech kind of made the market go up. Now, you're right, but here's the thing. A lot of people have been really critical of the Fed chair, including me, okay? I'm not saying I haven't been critical of him, but I think we can all agree on one thing. He has been very, very clear and direct as it relates to monetary policy. I mean, he couldn't have telegraphed it any better. And he says the same thing every single time. We are not going to stop until inflation is back to our 2% target. And he alluded to the fact on Friday that there's probably still a little bit more room for rates to go higher. That is the Fed mandate. This was said in 2012. The Fed mandate for an acceptable rate of inflation is 2%. Now, inflation has come down a lot, right? And I think it's important to acknowledge that. Inflation has come down significantly from 9.1% all the way back down. So I believe, what is CPI? What was the last CPI print? 3.2%? Now that's a significant decline, but the reason why it's still very, very poor in terms of a reading is because the two factors that are not yet showing any relief, or I should say the two categories or two data points that are not yet showing relief, is number one, shelter costs, right? And 9 times out of 10, shelter tends to be one of the biggest expenses in the average everyday American's life, right? People have to have a place to live, right? They need a roof over their head, and they also need to eat. They need food. And food is another category that has very slowly started to come down. And this is the big key, and this is the big problem, because the Fed chair also alluded to this fact as well. If you think back to your economics 101 class, or like if you've ever taken like a specific finance course, like a real estate finance course in college, you know, in layman's terms, there's an inverse correlation between rates and valuations for real estate. Generally speaking, okay, generally speaking. I know there's a lot of nuance, but generally as interest rates go up, valuations come down, right? And if you think about the last 14 years, we've had artificially suppressed rates from the Fed, which has created this massive housing boom. And then once COVID happened, we dropped rates even lower, and people were locking in, 3% 30-year fixed rate mortgages. So the dichotomy we're having now, which is so horrible as it relates to the affordability crisis, is that interest rates have gone up so much, so the cost of capital, the price of money has gone up so much, but valuations, right? Now, in some markets, real estate is softening, but in others, like New York, prices haven't really come down all that much. So you had the cost of capital go up 200%, and valuations stay the same. So if you're a first-time home buyer, right, looking at a $450,000 house, if it was 2021 and you took out a 3% 30-year fixed rate mortgage, well, your monthly payment's probably going to be what, $1,800. Now that same house that hasn't come down in value with a 7.5% interest rate, well, guess what? Your monthly payment's going to be like $3,800. So it's exacerbating the affordability crisis, and prices aren't coming down because there's not a lot of supply coming onto the market. I believe, and I want to hear from you all as we hear standing under the Whisper Wall. This is the famous Whisper Wall at Grand Central Station. I think one of the main reasons why inventory hasn't been coming on the market is because the vast majority of Americans who have mortgages outstanding have an interest rate under 5%. So even if they were to sell and make a lot of money, they would just have to find another place to live at higher rates, right? Assuming that they can't pay cash. So we're not seeing a big inventory glut from resales, and the inventory from new home builds that we're seeing are not in New York. You don't build, in comparative analysis, you're not building stuff here in New York, right? It's Utah, it's Colorado, it's Florida, it's Texas. So I think for those first-time home buyers out there, if you have any luck of valuations coming down, it's probably going to be in those states. It's probably going to be where there's going to be inventory coming on the market from new home builders. So I think Florida, particularly South Florida, Central Florida, you'll probably see some easing there. Places like Austin, Texas will probably ease a little bit, which I think is good, right? It's a good thing. I mean, God forbid somebody could afford to, buy a starter home for less than $500,000. So we'll see. This is now track 19 rather. This will take you to the Metro North. I kind of like the red trains a little bit better than the blue ones. Hey, Joel PM says inventory offline until those mortgages are paid off. 15 to 30 years starting from 2021. Jim says don't forget the effect that the capital gains tax has on discouraging existing homeowners from triggering a tax event by selling their home. That's another good, that's a good thought. That's definitely a good thought too. Let me catch up on some of the chats. RK says, is really inventory or price gouging? Prices are high in states with inventory. Could you give an example? Inventory is high relative to what, would you say? Relative to what? Hey, Mikey G says, I don't know how the younger generation are going to be able to afford housing. Yeah, I mean, it's definitely, I would say it's harder than ever before, but it's also easier than ever before, I would say. And I know that sounds like total contradictory statements, but if you look at it on paper, you would be right. You know, wages have been stagnant.
Your attention, please. All luggage and parcels
And the like.
at all times.
But there's also, it's never been an easier time to have access to information, right? To get these lucrative jobs. It's just, I think, if you compare it to, you know, let's say the 70s or the 80s, you know, in the 70s and the 80s, if you wanted to look something up, you had to go to a place called the library, and you had to go to an encyclopedia and sift through thousands of pages. Now you just say, "Hey Siri, what is the, who is the president of Zimbabwe?" And it'll give you the answer instantaneously. So there's a lot more tools in the 21st century we could leverage to be successful. So I don't know, I think there's a debate both ways to say, hey, is it harder for the younger generations to make it in America? I don't know, I would probably argue it's a little bit easier, just because the access to information is instantaneous, quite literally. And I think technology is deflationary in and of itself. Hey, Melissa 2087, good to see you. Yeah, Sparked Carnival, I have a crazy story for you. Unfortunately, I can't tell it on the stream. But yeah, let's just say you're right. CMO Solutions says information does not equal financial success. You're right. I guess that's what you do with the information. All right in front of us is the beautiful 270 Park. It's not yet completed though. It should be completed by early next year, maybe mid next year. Eddie H says, will mortgage rates go down next year, being that it's an election year? I don't think so. Right? I mean, what reason, and this is what I was going to ask you guys as well. There needs to be a reason, right? I mean, what reason does the Fed chair have to lower rates right now? Right? If you think about monetary policy, the Federal Reserve pulls the levers on the economy to speed it up or slow it down. And they do that in two ways. Number one, by manipulating interest rates, right? The Fed funds rate, which currently sits at 5.5%. Currently, 5.25% to 5.5%. That's the range. Secondly, they have a balance sheet. It's called the Fed balance sheet. You could look at it in real time at the St. Louis Fed's website. And they purchase mortgage-backed securities in U.S. Treasuries, right, to provide liquidity and expand the money supply, and vice versa, right? If they want to contract the money supply and they want to suck liquidity out of the system, what they do is they let the Fed balance sheet run off, right? So they stop purchasing mortgage-backed securities and treasuries, and they let those roll off the balance sheet, or they just sell outright. So if you think about why would the Fed need to cut this time, or why they would need to cut going into the election, there's really no reason, right? Because unemployment is at the lowest level in the country's history right now. Think about that. The unemployment rate in the United States is at the lowest level in the country's history. So why would the Federal Reserve need to take a stimulative approach if employment is almost at full employment? They just would not want to do that. That is why I'm in the camp that we're probably going to be higher for longer, in my opinion. Now, it doesn't mean I'm right. I could be wrong. But if the economy is still churning along and we don't have a massive spike in unemployment, well, then why would the Fed say, okay, great, we're just going to go ahead and turbocharge and stimulate the economy and rip inflation to 9% again? There's just no way that they would ever do that. I think that would just be ridiculous. I don't know. Any thoughts there? Hey, Michael Joseph, what's up? Powell wants rates around 7% to create demand destruction? Possibly. Yeah, Justin S. is, and it's not even that high. Like, we're getting back to normal. That's another really good point. I think it's just, a lot of these talking heads on CNBC, right? And I'm not trying to be negative or take a shot at anybody, but they're talking their own book, right? If you run like a growth stock equity portfolio and you have to keep a percentage of your portfolio long, right? Well, then you're going to want the appropriate monetary policy that's going to make your stocks do well. I think it was Joel PM that put in the chat here, it's very, very important to look at that 10-year U.S. Treasury yield, because the 10-year yield is used as the benchmark, right? And as interest rates go up, the present value of a company's future cash flows goes down. So they want rates to drop, because that would be very, very good for high growth equities. But if rates continue to go up, well, in theory, that would continue to put pressure on those particular companies and those particular stocks. So everybody's just out talking their book, which is, I get. But to say that the Fed is just going to start to cut rates, there needs to be a reason for that, right? But if unemployment, we'll cross the street to get away from this guy. If unemployment is at all-time record lows, I mean, I don't see, why would we need to be stimulative here? And also, inflation's not yet back to the 2% target. And if you listen to the speech on Friday, you'll recognize that the Fed chair is very, very direct in saying we are not going to stop until we are back at the 2% rate. So who knows? Hey, Ryan Beck, what's up, man? Good to see you. Thanks for joining us. This is the first night back after the Big C. Hey, Chinook wins his higher rates until another bank failure or foreign bond route. potentially. Hey, Raj says it will take a few more quarters to see the real impact of higher rates. I think I agree. Now, it's always, if you look at previous cycles, and Ray Dalio talks about this in his book, Principles, it turns out the same, right? It always, I don't know if this is a real snake or not. I think that may have been real. But Ray Dalio talks about this a lot in his book, Principles. And when you go in a hiking cycle, right at the turn of the cycle, usually real estate is the last to feel pressure, right? Or feel the full effects of the tightening. And that's due to liquidity. Hold on, let's just get away from this. And that's due to liquidity, right? Because if you're an equity trader and interest rates start to go up, you can price that in pretty much automatically because equities are very, very liquid, right? You could literally wake up and, market, sell, and liquidate, $10 million worth of Apple stock, and it would get auto executed like that. So again, equities traders in the market can adjust valuations in accordance to rates much faster than the real estate market can, right? If you look at it, a balance sheet, it's in order of liquidity. And at the very bottom is the less liquid items, if you will. And real estate is relatively illiquid comparing it to equities. So I think you're right. All right, guys, I think I'm gonna cut it here. I gotta get some water and my voice is probably gonna go on me in a minute. But we will be back live tomorrow. If you enjoyed the live stream so far tonight, you feel free to leave a like on the video, subscribe to the channel if you're new. If you're looking for a place in the city, if you're looking to sell a place in the city, if you're looking to rent a place in the city, you could use me as a resource now. You can do deals with us here at the Kirsten Jordan team. If you want to check out some of our listings, if you type !Broome, B-R-O-O-M-E, you could watch some of our exclusive listings in and around Manhattan. But I got to sign off because I think my voice is going to go here any minute. But everybody, have a fantastic week ahead. I hope you all had a wonderful weekend, and thank you so much for joining us. I think this is really fun. So I appreciate all of you coming out tonight. So UNIJ23, appreciate it. NNB 045, Hawaii, thank you for watching. Joe Driver, appreciate it. Buy the book, Joseph Hardaway. GG NYC, all of our moderators, Ryan Beck, Austin City Limits, DM, appreciate it. Everything in Miami, SME Media. And we'll see you guys tomorrow. Hopefully my voice is back to 100% by then. Thank you all, and have a great week. And Western Mass Dave, thank you so much.